Welcome, everybody, to Global One Media Stocks to Watch. I'm Michelle Martin. Today, we're zooming in on one of the world's most important industrial metals, copper. The red metal has been rallying as commodities gain popularity as a hedge against inflation. The price of copper is up more than 25% since the start of the year. It recently rose to an all-time high, and soaring prices show no signs of abating. Joining me now for a closer look at copper mining is Giulio Bonifacio. He's the executive chairman of Alta Copper. They have a very large copper project in Peru. Giulio, it's great to see you again.
Great to see you, Michelle, and thank you for having us on today. Very much appreciate it.
Your copper project is up in the Andes Mountains. It's called Cañariaco. It's nearly 100 square kilometers in a prolific mining district. And you recently released a new economic assessment of the project. Tell us how much you expect to produce each year and what is the projected lifespan of the mine?
Well, that's what's very compelling about the study. It's very advanced, I would add. It's on the back of several previous engineering studies, inclusive of a pre-feasibility study. And the group that worked with us, Asanko Engineering and Whittle Consulting, have a wealth of experience. And so the intent was to put forth accurate numbers. And what you'll see in our space is you'll see certain companies put out certain reports that might be a little aggressive in terms of the capital costs and the operating costs. The intention here is really to put forth something that is very defendable. All the assumptions built within it. Took us a considerable amount of time to get us to this point, but this is really the major catalyst. And one of the other key focuses is it is a project that can be brought online before 2030, depending on timelines with respect to the regulators. But what is very, very compelling about it is it is a big project, modest capital if you look at capital intensity, but producing 158,000 tonnes of copper per year for the first 10 years, which in itself is close to 350 million pounds of copper if you're looking at the imperial metric. Very good operating costs, fantastic margins. You mentioned what was occurring with respect to copper prices and the increase. It's got very good leverage with copper price. Every 25-cent increase in copper price equates to a 425 million US increase on the after-tax NPV. But just to give you a general range, at $4 copper, 2.3 billion. At $5 copper, 4 billion. Now that's after-tax NPV. There's also really a good opportunity on the tax side to mitigate the tax exposure. However, we didn't, delve into that at this point. It was really about what does a pre-tax number look like? What does a post-tax number look like? What are the internal rate of returns? And any time you have a $1 billion to $2 billion project that generates an IRR of north of 20%, and which is the case at $4 copper, 24.1% to be exact. At $5 copper, 33%. You typically do not see that. And also when you do a comparable on this with respects to other projects, other companies, you'll see that we match up. All the company benchmarking that we've done, and it is contained within our presentation material. So for those that are interested, please do visit our website and go to our presentation. You'll see that we match up very, very nicely on a project that's got scale, it's got size. And so we're very, very excited about this. We do believe this will be the beginning of a re-rating. Our share price has increased. Of course, shareholders that acquired at a lower threshold probably do take some profits, but it isn't about I think we're trading at about 75 cents. It's not about a 75-cent share price. It's about what this project represents, size, magnitude, and how we re-rate it over a period of time by way of project executing on every front. And I think we're starting to demonstrate that we're clearly able to do that. We've got a wealth of experience as well. So hopefully that covers off that question for you, Michelle.
Very well, thank you. You're valuing the project at $2.3 billion US, and you just gave a very nuanced idea of how sensitive this is in terms of projection to swings in the price of copper. I'm curious if there are any other factors that could impact the bottom line.
I think it's at this stage, the capital numbers that we have put forth are we're very comfortable with them because of the wealth of infrastructure that we have. We've got a highway to the north that we would tie into, 24 kilometers. We have a power grid 54 kilometers away. All the attributes that you need for a project are in place. There has been historically some commentary on our ability to advance with the community. We're making fantastic gains with the community. That's a process. I mean, I will add that not identical, but I have permitted the largest project in the American Southwest. I understand process. I understand stakeholders. The commentary on community permitting that applies in any jurisdiction. So anyone to suggest otherwise, they're really missing the mark. They don't completely understand what goes into this. And we've added to our team on the community side. That's advancing nicely. We do, as mentioned in the previous interview, a very large $60 billion company that owns 30% of the company that are very, very happy with the results. And so I think we're well positioned to take advantage. Now, I would add all junior companies that are developers simply have no business building their projects in many instances. They don't have the balance sheet. They don't have the execution team. We're not intending to build a project, but we've got a project that is clearly economical. Again, not 10 to 15 years away from a production start. There's a process that we have to manage. I think we were demonstrating, and we'll clearly demonstrate in the coming months that we'll continue to be able to execute. And there's one other aspect of this that could really change the value proposition. We already sit on a project that matches up nicely to many companies that have valuations well above ours. And that will change. We'll bridge that gap. I remain convinced of that and continue to acquire further shares in the market and otherwise, because I'm very, very pleased with the investment prospects here. But I think when you look at the opportunity on the existing resource, we already demonstrated 27-year mine life. If you look at the presentation material, it's pretty clear that very, very likely, and there's never a guarantee on these sorts of things, but with the wealth of data, the 3D geological modeling that we put in place, we do believe that arguably we have an ability to expand the resource in a significant way that could add significantly to the mine life. And anytime you move forward with expansion opportunity like we have we have a secondary deposit that we've discovered in Sur with 15 drill holes. Third prospect has had no drill holes, has all the right geological signatures. We intend on drilling that by Q4. And I think all that will do is demonstrate that here's a project that could be arguably generational. That changes the value proposition. But even at 27 years, even if we had no success with the drill bit, we have a project that just makes a whole bunch of sense. And in Peru, it's changed in a very significant way. It's very positive towards mining. It used to be, it's moved back to the middle. The mines minister, Romulo Mucho, is a person that actually worked at this company years back. We met him during PDAC off-site. He was very, very supportive. Those relationships will pay dividends for us as we move forward. And so again, short timeline. When I say short timeline, in this cycle, it's not 10 to 20 years away. It's not an early stage exploration asset, but it has all the right characteristics. It has fantastic economics. It has a production profile of scale that is of interest to the majors, and thus the reason that Fortescue is invested as they are. But the upside on it as well is something that shouldn't be overlooked. And so, we're very, very excited about the prospects. We know that investors will start to pay attention. We're bringing in a new investor base that, are starting to appreciate the opportunity. So I think there's many, many positives that go into this project. But, at the end of the day, it is solely based on the project itself and our ability to execute. But I think we've clearly demonstrated with this study that we're able to do that, and you'll see other developments take place in 2024 that will further support the value proposition.
Let's take a look at the cost side of the equation. You're projecting capital expenditure of $2.2 billion US. What's the breakdown on these costs?
When we look at capital costs, the initial capital, as you noted, was $2.2 billion. It's made up of mine. The process plan is about $800 million, site service, utilities. There's detail in that. There's also a considerable contingency built in of about 24% if you factor in initial and sustaining. But from a capital intensity perspective, if you look at where we sit relative to our peer group, our NPV shows a low capital intensity. Our mine production on an annualized basis shows a low capital intensity. Even from a mill capacity standpoint, we're at the right end of the spectrum. So for a project of this size, the capital is considered at the low level of the intensity curve. So, but again, just to recap, the detail is contained within the press release we put out. I've touched on some of the key cost centers, but there is a detailed breakout in our presentation material that investors should look through.
You're
But
projecting a cost of more than $11 per ton that's processed, or less than $2 per pound of copper. How does this compare to other projects?
well, first I would say that this is a current study, so if anything, it's likely more accurate. Some of the other projects that we looked at had put out their studies earlier on in the year, but we came in at $1.84 C1 cost, all-in cost of $1.96, $1.97. Many of the other projects come in at $1.50 to $1.25. But again, those are outdated studies to a certain extent. The intent, and I have to be very, very clear about this point, the intent was to put forth a study that was accurate, that we felt comfortable with. If you looked at certain copper producers, just as an example, to show you, our all-in costs come in at close to $2. Hudbay, which is a producer, mid-cap producer, their all-in costs come in at $2.25 to $2.40. So Capstone is another company as well. So when you look at other reports that have been put forth with C1 costs and all-in costs that are below a certain threshold, all I would suggest is those numbers likely have to be updated. But our numbers, again, are very current, very accurate. Also, our engineering group, Asenco, has a wealth of experience in South America. Recently worked on the feasibility work for Safranal, which is a tech project. We're the mine build engineering group for Constanza, which is a project that Hudbay owns. So yeah, our cost range is, you know, even at the all-in cost that I made reference to, clearly the margins that get created on a project like this are very, very significant.
Are there any concerns that costs could rise by the time this project comes to fruition?
You know, that's a very good question. I think that's clearly always a possibility. And I think that if you look at projects worldwide, you look at what occurs with certain projects when they come out with their feasibility studies or economics, and they put forth a capital number. Those numbers invariably do change, but we've built in a significant contingency across the board to factor in that. But you know, to suggest that that's not a possibility would be flawed. It clearly is a real distinct possibility. The reality is it's the margin that gets created, but you know, at a commodity price of $4 or $5, we've got ample margin. It's also a project, unlike many, that can produce profitably at below a certain copper price. So if you're of the view that copper goes below $4, we still have a very profitable operation in front of us. Now, again, it is a project that needs to be built by a major that has a balance sheet, that has the execution team. And that is a clear strategy that I've had from the outset. It isn't about a company like Alta moving forward. And the negative of us moving forward as well is it creates a dilution scenario, the amount of money that has to be raised. The focus with our share structure, approximately 84 million shares outstanding, is to maintain that share structure. I'm a large shareholder and continue to add my position, as I noted, but it is about executing on the project, but also enhancing the proposition across the board, but appreciating that because the project is an advanced development asset, we do not need to seek $50 million or $40 million to raise to drill the project, to convert to inferred. Most of the resources already measured and indicated. We want to do a drilling program at the end of the year to demonstrate expansion. We've had nothing but success with the drill bit on this project. Last drilled in 2013, 85,000 meters. You compare that across the board to many, many other copper projects, and you'll see that we're well below the curve. There's nothing but upside on the resource, but that's what we want to point to. But we're not going to go through a situation where we need to raise 50 million to 100 million to continue to advance the project. You'll see many copper developers are doing that. Sure, they have attractive resources, but you know, they typically have 5 drill rigs on site. They continue to drill. They need to look at conversion. Their study isn't any more advanced than ours. And so I think bridging that gap, creating market awareness, and showing very clearly that it is a project that, you know, in itself represents a significant margin on copper price and leverage to copper will help us as we move forward.
Giulio, if we could zoom out again, what would you say are the most significant top-line findings of this study?
The size and scale relative to production and capital, because when you look at this project, because of the bond index, and that simply means soft ore, most projects of this size typically have 2 SAG mills, 4 ball mills. We're able to process with 1 SAG mill, 2 ball mills. That keeps our capital cost down. That allows us to process on a daily throughput rate of 120,000 tonnes per day. Now, anyone that steps into it can look at the configuration and look at the first study we put out years back. And again, it was $1 billion of Capex, showed how you could grow it by way of cash flow from the project, but not as attractive as the economics on this recent study. This recent study shows scale, magnitude, but with a capital number that is very achievable because of the fact that we've got great infrastructure, we've got moderate elevation, it's got all the right attributes, we've got port facilities, we don't have to build out a loadout bay, we've got all of the right signatures that allow us to build a project of real size, but at a capital number of 2.2 billion that is very, very reasonable, defendable, and within that initial capital, there is a 21% contingency factor. Now, if you add initial capital and sustaining capital, that contingency factor goes up to about 25%. Now, what I would say is if you compared our numbers to any of the other copper developers, and again, there's certain other copper developers that have projects that are extremely interesting. Like don't read too much into that statement. But if you looked at all-in costs, initial, sustaining, closure cost, and you did that analysis, you'd see that we're at the better end of the capital intensity curve. And there are slides that again, the investors should spend time looking through. That'll be it'll be very, very obvious that we're onto something that's of significance. And then the margin in itself, any time a project can produce 158,000 tonnes of copper, that's just the copper. 88% of the revenue is copper, 12% is gold and silver. But just on the copper alone, 158,000 tonnes of copper per annum for 10 years, life of mine goes down to about 134,000 tonnes of copper. That's very significant. It is enough to move the needle for some of the bigger companies. And thus, I would add, a big reason that Fortescue has invested and has followed the company and have been a very supportive shareholder, I would add as well.
Now that you've had a chance for a fresh assessment of the Cañariaco project, what is your message to shareholders, both current ones and potential investors?
We're clearly in, and I've been in 2 previous copper companies that did very well. I did very well by as well as others. I like this asset a whole lot because it's got the scale, it's got the size, it's got considerable leverage to copper and copper price, but it also has an ability to be profitable below a certain copper price, which is unlike many other projects you'll see out there. It's got considerable upside by way of the drill bit. It's got a serious $60 billion company behind it, and that should speak volumes. And that is clearly your best validation of the project. It also has a notable engineering group behind it that acquired a big share position at last year at a 30% premium to market called Little Consulting. That is arguably your best validation of an asset. You will see further analyst coverage come into this story as we, on the back of this study, present it appropriately to the various banks, institutions, analysts. But clearly, from my perspective, no downside, nothing but upside on it. The question that one must ask is, what does the copper market do in the coming months, and how many projects are ultimately looked at like this one, because it is a short timeline, a relatively short timeline to production. Again, it's not an early stage exploration story. It's not 15 to 20 years away. It is imminent, and we are making fantastic gains in Peru. They've really streamlined the process, making very good gains with the community. Anyone that suggests otherwise, I wouldn't pay too much attention to. There's always sound bites that are out there in the marketplace on any project. At the end of the day, it is about execution. That's the focus. The management team, from myself to the founder of the company, Johan Fries, to Sean Waller, who's a key advisor to the company on the engineering side. We're very, very committed to what has to take place here in the coming months. And when we have a study of this nature that we can present to various groups, inclusive of our big shareholder, I just think there's a real good opportunity here to see further leverage, a re-rate. Any investor that acquires, I think, will do extremely well by it. Clearly, I'm buying for a reason. It's not to lose money in simple terms. I think there's just a fantastic opportunity here.
We've been looking at the latest economic assessment of the Cañariaco Project with Giulio Bonifacio, Executive Chair and Director of Alta Copper Corp. Thank you, Giulio.
Thank you very much, Michelle.
Stay tuned for more insights and updates from Global One Media, and see you next time on Stocks to Watch. I'm Michelle Martin.